Imagine average home prices sitting at like $900,000. That's what that could look like. All right, how's it going? Welcome back to The Numbers and the Nuance. This is where you come weekly in order to know exactly what's happening in Utah's real estate market. My name is Christopher McGee. I'm the owner of Halcyon Real Estate. This is Doral Dino.
Howdy.
One of these days, I just want you to have more to say.
Hello guys, my name is Doradinho Cervelle, and this is my good old friend Christopher Bond. It worked.
It worked.
He's
totally
a secret agent.
Secret agent, man. Halcyon Real Estate is affiliated with the Keller Williams Market Center in Salt Lake City, Utah. And as always, we're gonna dive into telling you what my nuanced opinion is of what our market looks like right now and show you those charts so you can see what the trends have been over the last several weeks in Utah's housing market. Let's check it out. So just going from the top in terms of the charts that I'll show you in order, our inventory, which is always the first number I look at, I think it may have peaked a couple of weeks ago at about 11,330, whatever it was. And that's to be seasonally expected. We tend to peak right around October, and then because we're heading into cooler weather, there's just less activity on both sides, both selling and buying heading into cooler months. So I'm pretty psyched about how high inventory got. This is the highest inventory has been since I have come into real estate and for years prior. We got to 10,000 something in October of 2022. It never quite recovered like we needed it to after that. The amount of demand that we had throughout 23 and 24 remained pretty resilient, even in the face of higher prices and higher interest rates. And so I'm pretty psyched that inventory has got up to this point. 11,000, we're sitting at 11,200 something. You'll see exactly what the number is on the graph. Days on market is also trending up as we would expect seasonally right now. You'll see the average list price spiked just a little bit this last week to an uncomfortable over 700,000. We really don't like that. We don't want to see home prices up anymore. We really want to see average home prices come down. And the next thing I'm going to talk about is our interest rates. You may have noticed that interest rates bumped back up about 0.5%. So we were hovering at about 7% all year. That dropped across the course of 2 months from 7 to like 6.1% for mortgage interest rates. And they've bumped back up to 6.6, okay? Ish, right? It always depends. I don't think I have to say this for the kind of people who are watching this, but it always depends on several factors. It depends on how much down payment you're gonna make. It depends on what your finances look like. It depends on how big the loan is that you're pulling out. It depends on your debt to income ratio. Depends on a bunch of stuff, exactly what your interest rate is gonna be for your mortgage. Now I tried to tie that in real quickly with our average list price in order to say and make the point that while nobody likes the idea of interest rates bumping back up closer to the higher rate that they were at. If you've been watching any of these that I make for the last any time this year, honestly, then you know that my opinion has been perhaps an unpopular one, but it's good for interest rates to stay a little bit higher. And that's because if interest rates come down too quickly, it will precipitate so much demand as to take away from this amount of supply that we've been building, and that will put upward pressure on our home prices again. And really, guys, these higher interest rates are what is keeping our prices reined in to the degree that they are. So if you feel like these prices are too much, and we all do, just be thankful in a weird backwards kind of way that interest rates are keeping it from shooting it up any higher. Don't kick our lighting over, bro.
I know.
This is the second time today. I don't know what you have it out against our lighting about.
It's looking at me funny, that's why.
I can see what you mean. I can see what you mean. So I was a little bit concerned about how fast interest rates came down from 7 to 6. It excited a lot of people. It was like, here it comes. Here's the interest rates we've been waiting for. There's a lot of buyers pent up waiting for the opportunity to buy. I'm a little pleased actually that we're back up to 6.5, a little over 6.5, because if we continued down at the pace we were going, then come next spring, the demand would have been unbearable for our market and prices would have gone significantly higher. Okay, let's look at the numbers. Our inventory now sits at 11,278, which is up just a bit from the previous week. But like I said, I think we hit our peak a couple of weeks ago at 11,334 is what I want to say the peak was at. Average days on market as of last week sits at 54, which is down just a couple from the week prior to that. But we can see that this is also trending up, which we expect seasonally, like I said. Average list price this prior week came to $713,092, which which is up from the previous week, and we don't like it. You can see that red trend line going through the graph. If it's going anywhere, it's going the tiniest bit up, but it looks pretty level, right? And heading into cooler months, and especially considering interest rates aren't plummeting, I do believe that this average list price each week will basically start to fall. And don't expect a waterfall dive, guys, but I do expect it to come down. I'll just throw out a guess of into the low 600s as average list price, okay? Average sold price last week came to 699,652, which means the difference between average list and average sold price last week came to $13,440 in the buyer's favor, which is down from the previous week, further away from no difference between average list and average sold price, which has typically been the song sung all year about 10 to 15K under list price at which homes are sold. Now, the number of homes sold last week came to 475. That's down pretty significantly, pretty sharp. And we see this graph looking pretty variable up and down, but we can see that over time, as we expect for this time of season, that it is trending down. That is what we expect. The number of homes currently under contract sits at 5,091, which is up a bit from the previous week, but this has started to trend down over the last several months, and we could basically plan on that continuing. The number of price reductions that happened on homes last week came to 1,261, down a little bit from the previous week, trending up as we would expect, again, seasonally heading into cooler weather. The number of the number of listing contracts that were either canceled, expired, or withdrawn from the MLS last week into 356, down from the previous week's spike, because the first reporting of each month is always a spike, and then it comes back down. Nevertheless, overall, we can see that this number is trending up as well, which has everything to do with inventory coming up. The fact that there's more people selling homes than there have been for years and years is every bit of the reason why there are just more people. It looks like more people are canceling and expiring and withdrawing their listings from the MLS. There are, but just because there's more people on the market, period. And finally, interest rates, as you can see, sitting now at 6.64%, up a tick from the previous week. It was 6.62. And what happened, I mean, we'll have that kind of variability across the course of any given day, but up obviously about 0.5% from the low point that it got to at 6.1. And that's it. What questions do you have, Doraldinho?
Well, Christopher, the weather outside is very
frightful,
and
but the fire is
very delightful.
Okay, what was your question?
My question is, you said earlier about something, if the interest rate was to go down by a lot, it would be unbearable.
Yeah.
And my question was, would it be unbearable for the home buyers or the agents?
Good question. Let's say interest rates came down and they were in the low to mid 5% range, okay?
All right.
That would pull so many buyers out of the woodwork who've had all this pent-up demand to buy homes in Utah for the last few years. Across the course of a month, we'd have like 2,000 less homes in inventory. Across a couple months, 3,000 or 4,000 less homes. Across 3 months, right? So what we'd be looking at is, in the space of a quarter, the level of demand would decrease our level of supply at such a pace that everybody would see that, and pretty soon we'd have way more demand than we had supply, and that puts upward pressure on home prices. So the reason I say plummeting or even over fast dropping interest rates would be unbearable is because home prices are already near unbearable, especially for first-time home buyers. If home prices don't get a chance to stay level, if not dip, then and that upward pressure on prices we would get with increased demand that would come with dropping interest rates, that is unbearable for Utah right now. For home prices to shoot up anything like they did in 2020 or 2021, that's unbearable. Imagine average home prices sitting at like $900,000. That's what that could look like. And we don't want that. I don't want that. Now, you split that question into two and said, what would that look like for home buyers and what would that look like for agents? For agents, it might seem really convenient because there's different kinds of listing services, right? Some of them are just like flat fee. That wouldn't change too much, although their flat fee would come up with home prices coming up. For a full service agent like me and like you soon to be, For full service agents whose compensation tends to be a percentage of the sales of the home, it seems really convenient for home sales to be driven sky high and for us to get paid that much more. But I just don't look at it in that terms. I'm a person too, and I'm needing, you know, what I need for my family too. And the housing market can be seen as a bit of a microcosm of the economy at large. And if housing is that bad, then goodness, with gas prices, groceries, trying to buy your next phone, whatever, you know, being able to save anything up, 9 out of 10 renters are priced out of the housing market in Utah right now. I don't want it to be 10 out of 10. It will be a short-term benefit for realtors if home prices shoot up, like in the scenario that I just laid out. It'd be a short-term benefit, and I want a longer-term, healthier housing market. That's it for this week. Thanks for watching, you guys. If you have any questions about anything that we went over, just hit us in the comments and we'll be happy to respond. If you or anybody you know is thinking to sell or buy their home here in Utah, especially in Davis County, Salt Lake County, or Utah County, hit me in the comments, reach out to me any way you're comfortable with. You know I know this market like the back of my hand. Hopefully you know that I'm here to make that process as seamless and anxiety-free as possible for you. That's my goal.
And don't forget to hit that like button and subscribe. Thank you very much for watching.
There'll be no better way to stay educated on Utah's housing market than to do exactly that.